Hello and welcome to AI Market News by LM. Tensions in the Middle East are absolutely boiling over. The United States has just set a firm deadline for Iran, and let me tell you, this is way more than just a political headline. It's sending some serious shockwaves through the financial markets. So today, we're going to break down exactly what this could mean for oil prices, the stock market, and the US dollar.
So at the very heart of all this market anxiety is this new ultimatum. Essentially, the US has given Iran a window of about 15 days to get a nuclear deal done. This has just unleashed a huge wave of uncertainty. And right now, every single trader is glued to their screen, just watching and waiting to see what happens next. All right, so let's dive right into the catalyst for all this market madness, the deadline itself.
I mean, that's about as direct as it gets, right? This statement sets a very, very clear and urgent timeline. It's basically telling the market that the window for diplomacy might be slamming shut, and fast. And what's really important here is that this isn't just talk. It's being backed up by a major show of military force.
We're seeing the US move a massive amount of military hardware into the region. We're talking a huge increase in flight activity from military transports and tankers. This kind of buildup is a powerful signal that the administration is serious, and that is precisely what has the markets so on edge. So, as you'd probably expect, the most immediate and direct reaction we've seen has been in the energy sector. Let's take a look at the numbers. Brent crude, which is the big international benchmark for oil, has absolutely surged. It's broken right through that $72 per barrel mark, and we're not talking about a small move here. This is a really significant high point for oil. And just to put this into perspective, oil prices are now at levels we haven't seen in 6 months. What this tells us is that the market is pricing in a pretty substantial geopolitical risk premium. Basically, people are betting on the real possibility of a conflict. And if we look at the sentiment among traders, well, various news commentaries suggest this could be just the beginning. A lot of them are getting positioned for a longer conflict and much, much higher prices. Some are even making bets on oil hitting that magic number, $100 a barrel. And that brings us to the really crucial point here, the Strait of Hormuz. This narrow little waterway is a massive choke point for global energy. Get this, nearly a third of the world's seaborne oil passes right through it. So any military action could totally disrupt that flow. And that's the scary scenario that has everyone asking, is $100 oil actually a realistic possibility?
But this anxiety, it's not just stuck in the oil markets. No, this fear is spreading, and we can see its fingerprints all over the stock market as well.
We're seeing a classic risk-off day for US stocks. The major indices, the S&P 500, the NASDaq, the Dow, they're all in the red. Investors are pulling back from anything that looks risky in the face of all this uncertainty. Now, to get a better read on the market's mood, we can use tools like the Fear and Greed Index. What it does is it looks at 7 different indicators, things like market momentum and volatility, to figure out if fear or greed is the main emotion driving investors. And no surprise here, right now, that needle is pointing straight at fear. We had some hawkish signals from the Fed earlier this week, and now you throw these escalating military tensions on top? Yeah, investors are feeling pretty nervous. And this chart really shows that flight to safety perfectly. As investors are selling stocks, where's that money going? They're moving it into traditional safe haven assets. We see gold surging over 1%, and the US dollar is also getting stronger as investors rush towards stability. So let's dig a little deeper into the dollar's strength, because what's happening in the currency markets is telling a really fascinating story right now. We're seeing the US dollar just flex its muscles across the board. The euro is slipping against it, but the move against the Japanese yen, that one is particularly interesting. The dollar has pushed right past the 155 level against the yen. Now, this is a huge psychological and technical milestone, and it just highlights how strong the demand for dollars is at this very moment. So what we're really watching here is a battle of the safe havens. Usually, the yen is a go-to currency in times of trouble. But the scale of this uncertainty is just driving this overwhelming demand for the US dollar. As the world's main reserve currency, its liquidity is just unmatched, making it the ultimate safe harbor when things get shaky. Okay, so even with every single eyeball on the Middle East, we can't completely forget that there's also a pretty busy week of economic data coming up. Looking at the economic calendar from investing.com, we have some high-impact US data releases on the way. We're talking about the core PCE price index. That's the Fed's favorite inflation gauge. Plus, the latest numbers for GDP and personal spending. In any normal week, these would be the main events moving the markets. Which leaves us with a final pretty big question. When the entire market is fixated on military deployments and potential conflict, do these fundamental economic numbers still matter as much? Or is geopolitics just going to dominate every single trading decision for the foreseeable future? That's what we'll be watching. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.